All right, guys, welcome to the weekend video. Um, I wish I could start this more like Joe Rogan. I wish I was as cool as him, but I'm just not. Um, it's bullwaves.org weekend update, obviously. I'm going to go through the markets. I have a little bit of trouble with the Treasury, my MetaTrader feed on US Treasuries this evening. So bear with me. I'll wing it a little bit. Okay, so I'll start with the FX market and we'll move from there. So here is euro dollar. Okay, so let's go from the 4-hour chart on euro dollar. So what I'm working with, you've kind of seen this last week anyway, but I'm working with a leading diagonal to the downside in wave 1 and a possible ongoing 3-wave correction in wave 2. Yes, this would be part of a larger third wave down. So you can see the wave 2 in blue here. So this would be wave 1 and 2 of wave 3. So if a third of a third wave is imminent in euro dollar, well, it's time to get out, isn't it? Sorry, I'm just going to be feeding myself wine while I'm doing this to to relax the vocal cords. That's why. That's my story anyway. Okay. So if this three-wave pattern materializes over the next week or so, well, then we should probably see a run-up to at least this upper trend channel line here. So I know we've got a pretty severe drop today, but it's still possible to count it as a wave 2, and let's get in there and see how that has played out. Yeah, I was expecting a kind of a continuation of this a possible 5-wave pattern up, but it seems that maybe it's a 1-2 pattern rather than I think I was counting that as wave 4. So it's a possible 1-2, and if we break 114 on Monday, well, then we should be seeing a third wave up. So that'd be 1-2, wave 3, 4, and 5 early next week to complete wave C. So 5 waves in wave C of wave 2. And again, we could even spike higher than that. So we have a 61.8 or 62% retracement there at around 115.80. So you could see that happen too. The alternate count here is for a possible running flat wave 2. So I'm not a big fan of that, but it's possible. Usually you'd see more than, like a 30% retracement in a second wave. Usually it's up to that previous fourth wave, around 50%. So with the usual story for now on this one. So I would expect a run up in a third wave of wave C on Monday. And if you can hear a ringing in the background, that's just I've just downloaded MetaTrader. I'm able to turn off that notification bell on it. So you'll just have to put up with it because I have to. Okay, so there is euro dollar. Let's go down to pound dollar. Pound dollar has been a damn strange one this week, I have to admit. We've got these 3 kind of interim lows here. It could be like a descending triangle, possibly. The 3-wave pattern in wave 2 seems pretty solid as running flat. So we've got that 3 waves up in A, 3 waves down in B, and then a nice impulsive kind of 5-wave looking pattern there in a C wave. It did create a lower high, so it's a running flat, a type of running flat rather than the normal type of flat pattern where you'd see a break of that previous A wave high. So for now, I'm still working on the hypothesis that this is a series of 1-2 waves to the downside, and we're working on a corrective second wave here. So that corrective second wave would be a possible flat. You can see right now it's I think the market is closed. Yeah, it's 10 to 10 here in Ireland, so that's Greenwich Mean Time as well. So the US market is closed. The aftermarket is pipping higher slightly, but I don't see that moving. I don't see that kind of breaking out of that possible triangle in wave P by this evening. Anyway, we've got three waves up, definite three-wave pattern there. I've labeled it wave A. So far, this looks like a continuing B wave, and then maybe a pop higher on Monday in a C wave to complete three waves in wave 2. Resistance at 130.72, that'll be the previous wave 2. That has to hold in order for this to remain valid. Yeah, like I said, it's been a strange week. It's been a strange. The previous low on wave 1 was on the 15th, so it's been 30 or 15 days of just sideways, zero net action in cable. So something's coming pretty soon. So let's watch for that next week. Okay, so dollar yen. We keep on marching up to the upside. However, let me get a drink of wine first. We keep kind of sluggishly marching to the upside in dollar yen, which is, it's less than ideal. I know that, but we keep creating these significant higher lows, and the market has moved substantially. Well, let's say not insignificantly higher. We've got a kind of a consolidation pattern here, with possible 5 waves and a 3-wave correction. So we're still kind of playing with the idea that we've got a 1-2 pattern here playing out, and maybe an impulsive move off that recent low there. So let's get to the hourly chart and see what we're kind of working with here. You can see that if you take this high here on the 21st as the wave 1 high, then you can see that the next wave 4 did not break that level at 113.15. What was it, 113.20? So it was only like a matter of 5 pips or something in the difference, but it did stay above it. So far, we've still got this kind of 3-wave pattern ongoing off the wave 2 high here, or sorry, wave 2 low. So we do need to see further move higher in wave 5. I mean, it is a world where you could kind of parse this out into 2 separate waves. I mean, in there's a possible 4th wave in there, but I don't like the difference in scale there between that 2nd wave and if that was a possible 4th wave. I just don't like that. It's not impossible, but I don't like the difference in scale, large difference in scale. Now, in saying that, if this decline here kind of creates a further higher low, well then that would be your most likely bet then, wouldn't it be? You could move that wave 1 down here, and that would be a 3-wave wave 2 somewhere there. And the only way to confirm that is a further break of 114 again. So you're kind of stuck in the same bottle. No matter which way you split that, you're kind of stuck in the same scenario. Next week, I still want to see this possible 5-wave pattern complete early, maybe even overnight on Sunday night, definitely by early Monday, or well, let's say definitely by the close of Monday. So let's see what sort of action we see on Monday, and that should kind of clarify in the short term anyway what's happening in dollar yen. Okay, here's what everybody's been waiting for. This is the Dow, and we have pipped to another high again this evening. So I think we've got 5 waves complete off that recent low. You could call that a running flat, with wave C complete in 5 waves. And if that's the case, well then we should, I mean, this rally should prove just a fleeting, hopeful endeavor on the part of the market, and we should again return to new lows. So that's I'm still counting this as a possible 1-2 pattern, with the alternate count being a larger flat pattern in that wave 2 again. So let's get to the hourly chart again. You can see here that's the trend channel for that alternate count there. So you would, if that turned out to be the pattern, well then you'd expect the market to hit that upper trend line again at about 26,400 or 26,450 or something like that, and then turn lower into wave 3. But you're kind of pushing it at that point, aren't we? For now, I am, let's say, quietly hopeful or quietly confident that this is a 5-wave pattern that's complete in either wave C of wave 2 or let's say a running flat wave 2 at one larger degree. And if that's the case, well then we have a correction complete. At either way you look at that one, you have a correction complete, and you should see further downside next week. I know I was looking for a smaller correction, to say the least. I was looking for a smaller correction higher this week, and we did get a burst higher out of that Fed meeting. I wish someone would, YouTube's probably going to ban me for saying this, but I wish someone would just like duct tape the mouths of central bankers. They shouldn't be allowed when they take up their positions. They shouldn't be allowed to speak, for that 5 or 6 year period, whatever it is. It was interesting this week. We had our own central bank. Our own central bank doesn't, or the chair of our own central bank doesn't come out and speak very often. But this week he came out and he decried people who were complaining about the housing market and the tendency for people to chase prices higher with ever increasing amounts of debt. And his advice was basically stop taking on debt, which was a strange thing. I must say it was a strange thing to hear coming from the mouth of a central banker. That's not what they're supposed to be saying. But yeah, wise words from the mouth of the Irish central bank chief. Okay, so that's the Dow. Let's move on to the ever-present disappointment, gold. Okay, so here's the 4-hour chart in gold, and this week I moved up the count, obviously. So we've got a 1-2 pattern, and we're now again looking at a higher low in possible 1-2 pattern again. I wish I could turn that notification off, but I can't. I don't think I can. Well, not right now, anyway. So as long as, like I said in the update this evening, as long as we keep seeing higher lows, well then the bullish interpretation is most definitely on, and that's for a very large run up in a third wave. So this is the hourly chart here. So that's that previous wave one. A nice 3-wave pattern. And off the low trend channel, we had a push higher in wave 1, a possible, I think a pretty decent 5-wave pattern in wave 1, and with 3 waves then to Wednesday's low, was it? Wednesday's low at wave 2, that came in at 12.10 or 12.11, and we had a pop higher again, and a further pattern into today's low. That came in at about 12.16.50 or thereabouts. So if you were to push the envelope here, you'd have 1, 2, 1, 2, 1, 2, 1, 2. So 4 degrees of 1-2 waves, which does suggest a continuation higher in a third wave at at some degree eventually. For early next week, I want to see that 12.10. On Monday, I want to see 12.10 hold, and at the extreme, I want to see 11.96 hold. So we've got two decent levels there, and I think once 12, well, on the upper side, once 12.43 goes, well, then we are confirmed in wave 3 higher, and wave 3 in blue in brackets there, and once 12.30 breaks, then you can be pretty confident that wave 3 in brown is underway. Okay, so let's get to crude oil. And this is the 4-hour chart off the high. And we've got this possible inverted head and shoulders pattern off the recent lows there. The idea is that we've got a second wave emerging right now. We have a previous fourth wave there at the 58, so you would have a target between 58. Yeah, 58 would probably be a pretty decent target right now. Given the bearishness in the market right now, I mean, you wouldn't be surprised to see a run even higher than that. So if you were to pull that, like the 58 mark wouldn't even bring us up to the 38% retracement level. Well, that'll be 59.50. So $60 is a nice round number. It's around the 38% retracement level. And again, it would most likely hit the 200 period moving average at that point as well. So we've got a kind of cluster of targets there, if you want to call it that. So over the next week or so, that's what I'll be kind of working with for a second wave correction higher. So let's get to the hourly chart. It's a kind of it's a very messy looking wave count right now, because it's a very messy looking market right now. But we could have the extreme low in wave 1 came in at 49.40. I think that was Wednesday again. Was it Wednesday or Thursday? Yesterday? Yeah, sorry. Early on Thursday morning, we got that 49.40 level. So to come back down to the 40s again off a point where people were calling for an inevitable $100 per barrel is quite a feat in a few weeks, literally. So right now we're looking at a possible 5-wave rally, 3-wave decline in B as part of wave A. So again, we're up off the highs again this morning, so tentatively looking higher in wave C of A next week. The problem really at the moment is you can't. It's very hard to call an ongoing correction because you have no idea which way, like impulse moves are, or say, let's say motive moves are much easier to chart as they're going along and to predict, because it's 5 waves. That's all you're looking for is 5 waves or extensions of 5 waves. Corrections are a bitch. And excuse my language, corrections are horrendous, and you just really don't know how to, or you don't know where they're going to go until they're like 75% already over, or 75% complete. We won't really know until we have a clear pattern in probably wave A and B how this overall wave 2 is likely to develop and what sort of pattern it's likely to develop in. But for now, I'll work with this minor higher low, and I previous shoulder of the fourth wave there at 52.50 or 52.60. If we get a break of that 52 kind of 60 level on Monday or Tuesday, I think, well, then you could more confidently say that we're moving up into a correction higher in wave 2. So we'll kind of play it by ear next week and see how that works out. The S&P, here's the 4-hour S&P. Again, we pushed higher this evening. Someone had a very hot finger this evening coming into the close, and they just wanted to buy everything around them. We have, again, the alternate count for the S&P stands pretty clear as a, well, I should probably show it here as well, as the larger three wave pattern in wave 2, and you could work with that. Also the running flat idea that fits here also. So let's get an indicator around that to show that. Just talking to myself. Okay. Yeah. So there's kind of two alternate views here. There's the larger three wave pattern in wave 2, which would hit an upper trend line there, and that'd be kind of off the extreme lows. So you could call that an alternate. You could call a running flat at today's or nearby highs as an alternate count, or you could call this particular count that's shown on the short-term chart, or let's get to the short-term chart, as an expanded flat wave 2. That's also valid. The S&P is closer to running up to that upper resistance there. So if that was the case, if we did again on we have that G20 meeting, if people started making very positive noises over the weekend, well, then you'd probably expect to bounce higher on Monday, wouldn't you? And it would probably trigger that alternate count there at the larger wave 2. But either way, it's still a three-wave pattern. It's still a correction, and for me, this is still an ongoing bear market, or a bear market that's just begun. Okay, so for next week, we want to figure out where the hell we stand regarding this correction, and we should actually know by Monday which way this is going to split. Okay, let's get into silver. Again, silver has been a bugbear for me because I'm long silver, and I'm showing the daily chart here because I wanted, like I mentioned this evening, to emphasize the point that we're, within a couple of cents really, was 50 cents of the 2015 low, and I was mentioning the COT data, the recent COT data, and it's showing an even more bearish position at this point amongst money managers, a significantly more bearish position amongst money managers than the 2015 low. So I know we're close to that point. We're close low, but I do expect that this market is turning, and what I'm trying to chart is the initial move off the low, and that is where I'm getting kind of stung in the short term. So we have a possible impulse move the upside, and next week we just want to see confirmation of that. So the initial level to watch is 14.54 for next week in a possible wave 3 higher. Okay, so Treasuries. I'm going to go to last night's chart. We have a 3-wave correction in wave 2. I know today we kind of made, this is today's chart, which is it's a little bit messy because this is a new MetaTrader install that I had to put in this evening. You can see that the market bounced to a lower high, off a move off the high. So let's get to last night's chart. It shows wave 5 at that high. We have 3 waves in A, 3 waves in B, and then a possible 5-wave move, a 5-wave move higher in wave C. So with a 335 flat correction, more or less complete in Treasuries in the 10-year. What you would expect next week is for this decline to, or let's go to, this is the hourly chart again. You would expect that this lower high to hold, and for the market to push lower. We have an you would tentatively look at that kind of higher 118s, 118.90, or a break below 119 again as a decent indicator that that the market has turned down again. So for next week, we want to see if we can build a bearish signal off the high to kind of indicate to us that this correction in wave 2 is finally over. Okay, so that kind of covers it, I think. Wish you all a great weekend. Thanks for watching. Thanks for being with us on the site. Godspeed. Have a good one. Have a happy one and a safe one. And we'll see you on Monday evening. Bye-bye.